The stock market is very topical right now in conversations. Rightfully so. The S&P year to date down about 20%. We were just down about 24%, and the Nasdaq down about 30% year to date. So we've had a pretty substantial pullback in the markets. So a lot of conversation and chatter going on around that volatility. But let's not forget that the markets do, in fact, have volatility frequently. Every year, the market typically has 3-5% pullbacks, 1-10% pullback on average. And then once every 5 to 7 years, we do have a 20 to 25+% pullback. Those are averages. Sometimes it happens more frequently, sometimes less. But let's be aware that this is totally natural, healthy for the market, and let's not make emotional decisions or timing decisions based on the volatility. We know that based on past history, as a guide, and yeah, we can use it as a guide. There's no guarantee, but it's a pretty good guide. Every time the market has had one of these pullbacks in the past, and we're going back 70, 75, 100 years of history, the market has always at some point come back up and hit another new high. So let's make sure we're focusing ahead and knowing that we have time, that we can wait it out. Hopefully, if you're invested in the stock market, you have at least a minimum of a 5-year investment time horizon, and that would be a very limited time horizon, being 5 years. Typically, you want more than 5 years to be able to ride out some of the bigger corrections. And some of the bigger ones have lasted a little bit longer than others. Another fact is going back in history and looking at all of these market pullbacks of greater than 20%. Over the next 12 months after that bottom has been put in, the average rate of return of the market is about 27%. So by not making emotional decisions, not selling at the bottom, thinking that the market's never going to return to normalcy and come back and hit another new high at some point, we can't do that. So use this as an educational tool to stay the course. Make sure you have proper asset allocation, and especially make sure that your time horizon is such where you can ride out and feel comfortable at the same time, but ride out the corrections so you can participate in the upside which the market has given us over time, and not make those emotional bad decisions at the wrong time.